Hey guys, what is up, and I welcome each and every one of you to a new Tesla update video. So this is going to be, in my opinion, quite a fascinating video, guys. There's a lot to talk about. There's a few very important things that I want to bring up as well. But, you know, as usual, if you enjoyed the video, find it useful, informative, whatever, don't forget to hit that like button. It does help a lot. But nonetheless, Tesla ending the day with a beautiful run-up of just over 3%, closing the day out at $927.84, which is pretty good compared to the QQQ or the NASDAQ, I guess, which was, you know, just slightly shy of 1%. So Tesla definitely outperforming the market. Obviously, in my opinion, it's mainly due to the hype around the split, which is happening next Thursday. So we are in a very interesting situation, a situation that, in my opinion, looks pretty bullish and bearish at the same time, and I'll explain why, and I'll explain both scenarios that the bulls and the bears want to see for their respective, scenario to play out. So what the bulls want to see for the bullish scenario to play out, and what the bears want to see for the bearish scenario to play out. Now, naturally, I am a little bit more bearish than bullish, again, like I've said before, and I'll give you guys actually a lot more context as to why that is. But nonetheless, let's just get this party started. So first and foremost, look at the basic stuff out of the way. The EMA, you can see 21, well above that. The Bollinger Band, still well above the white line. Didn't really get a true touch to it yet. I mean, this was pretty close, but obviously wasn't there just yet. 50, well above that. Importantly, we closed above the 200 again. We did that here. Don't forget, again, I have that 3-day rule. Don't forget, right? So here we closed above it. Here we closed above it, and then the third day we went back below it. So essentially, if Tesla can maintain this area that it's at right now above the 200 MA, which is around 910, for the majority of this week, that in my opinion is a good sign. But again, I want to see like at least until the end of Wednesday to stay above it, at least. So we'll see if we can do that. That'll be really good if we can, really bad if we can't. And then the 10 and the 5, of course, well above that as well. So ultimately, Tesla is a short term looking a little bit bullish. I wouldn't be surprised if there is a pullback tomorrow, mainly because it's a Tuesday. Again, Fridays and Mondays tend to rhyme. Again, we had a nice green Friday, obviously a green Monday. And then Tuesdays, in my opinion, again, more often than not, maybe like 7 out of 10 times tend to be the opposite of the Monday in this case. So, but with that logic, I wouldn't be surprised if tomorrow is a red day. But like the type of red day that we get, in my opinion, will be very important. So let's talk about both scenarios, the bullish and the bearish. The volume, by the way, today, pretty average, nothing too crazy, not too small, not too little, it's in the middle. So nothing really to point out there too much. Now, intraday, very quickly, I want to mention, it was a simple, double bull flag kind of day. We had ran up here, had a little bit of a bull flag. Well, in about 5 minutes, it's a little bit easier to see. Had a nice little bull flag set up, broke out of it, went straight north, came up to the 940 area that I was talking about several times, which was my ultimate target, which I have noticed. I have been pretty accurate on targets. However, I've been pretty inaccurate on the time frame it takes to get there. Almost always it has been substantially faster than I thought. And in this case, the same thing happened. I expected to go to 940 at some point. I've called it out several times, but it came here like almost a week faster than I thought it would. I thought this would be like next week, not this week, but sometimes this market, we're in a really fast moving market. Let's just say that. Anyway, the point is that we had a double bull flag, right? And then of course this one right here, which was around that 930, 940 area, ended up breaking, unfortunately, to the downside. So we'll see what that turns into tomorrow. Again, I'm personally expecting red. And at the very least, I'm expecting to come back down to around 915-ish. That's kind of what I'm expecting. And if we break that, then most likely a gap fill. And if we break that, then we start getting a little bit bearish. But let me explain. So the bullish scenario, right? So first and foremost, the most obvious bullish scenario is the fact that, first of all, obviously a nice, beautiful green day. We're still closing above pretty much every major, short-term technical indicator, and especially we're now above the 200 moving average. All of those are actually quite bullish, and those are really, really good signs. But again, you need to have consistent closure above the 200 moving average. Again, similar to what we had here. This was a bait, to really solidify the fact that, the strength is there, and this isn't just some kind of, short-term rally, covering, whatever, bull trap. Because at the moment, to me, this looks like a bull trap until we can start really holding this range and not fall back below the 200 moving average. And if we can do that by essentially, end of Wednesday to Thursday, then I'm starting to get more convinced if we don't fall below on red days, especially, which tomorrow could be a really good example of that, or a really good test of that. So I'd want to see tomorrow, if it's a red day, which I think it will be, to not fall below the 200 moving average, pretty much around 908 to 910. you want to hold that, right? The RSI is unfortunately still below the average over here, which isn't great. Still kind of setting up a bearish looking flag, which isn't great. But that's kind of the bullish scenario, right? In my opinion, the fact that it's above major moving averages, short-term moving averages like the EMA and everything like that, the Bollinger Band is looking a little bit mediocre, but everything else is looking fairly bullish. Again, especially the 200 moving average. Now, that's kind of the bearish or the bullish side. And the other bullish aspect is the fact that Tesla tends to run up into splits. Again, the split for Tesla, the 3-for-1 split, is next Thursday, right? That is when the split is happening. And it's not uncommon for Tesla or even just stocks in general to run up into the split and then most likely sell off pretty aggressively after the split. It's almost like a sell the news type event. And because we are currently running up more or less into it, that wouldn't surprise me if we kind of roughly keep this momentum and run up into next week's split. Again, maybe around Wednesday, maybe even up to Thursday, and then probably sell off pretty aggressively is my current guess. But of course, there's a few factors that you want to see come into play. So the bulls, what do they want to see for this run to continue? Number one, on red days, which I think we'll get very soon, if not tomorrow, you want to see at least 900 hold, ideally the moving average of 200 being again around that 908 to 10 or to 910. And if you want to see higher movements on top of the consolidation and holding the strength and showing the strength, on top of that, you also really want to see this 940 break. Like you really want to see 940 break. And if we do break it, at the very least, I think we'll come up to 955. And if that breaks, I think we're definitely going to be on our way to 975, where we're going to meet some pretty heavy resistance that we saw over here, as you can see. However, if somehow we also break this, which I think is starting to get a little bit ambitious, but if we do break this and we go past this like 975 to 980 level, then I would not be surprised if we come up to test the ultimate resistance that is still in play, which will pretty much put us somewhere around the 1050 level, somewhere near the end of August. That to me is like the ultra bull case, and the regular bull case, I think wouldn't be too shocked if maybe some point this month we come up to 975. Granted, 940 is broken. If 940 breaks, I definitely think 975 is in play, right? So that's the bull case. Now, the flip side, the bears. What do the bears want to see to happen to Tesla for it to kind of, stop this rally? First and foremost, again, the SPY, right? Of course, it influences Tesla and how it wants to move. You can see is in this ascending wedge, which is overall a net bearish pattern, where by the time it most likely falls out to the bottom, which usually it does, not every time, of course, but pretty often, this will be a pretty massive fall, right? Once it does, if it does, of course. Not financial advice, do your own research, make your own decisions. You can see the RSI is getting extremely overbought. And the RSI and the SPY is really respecting this. So essentially, if the SPY does collapse southwards out of this, naturally it'll affect Tesla just as well, right? So that's what the bears want to see first and foremost. The second thing the bears want to see is the fact that on the 4-hour, you can see it's a bearish a divergence being shown as the RSI is making lower lows over here, even though the stock is still sitting all the way up here, right? So we're going lower than this area, even though the stock didn't go lower than this area on the RSI. So that's a bearish divergence, which is not good. On top of that, we are, like I said before, so far at least, we'll see what happens. This is why I said 940 for the bulls needs to break. We are setting up a potential double top. Right? Again, a double top is essentially an M shape, if you will, where you literally top at the same part twice, where you have a run up, you have a little top area, then you sell off a little bit, you usually create a bear flag, or sorry, a bull flag. From there, you rally up, and then you rally up and you create essentially a top at pretty much more or less the exact same level. So in this case, that is roughly that 940 level. And it, like I said, looks essentially like an M shape, where you have a run up, you sell off a bit, you run up again, pretty much to the same level, and then you sell back off, right? That's a double top. You can see the two double tops right here, and you can see the M shape. That's essentially what that pattern is. It's a very common pattern. It's a very bearish pattern, and that's the pattern I've been talking about for several days now, actually, that I've been waiting for. It just happened a lot faster than I expected. That right there is a pretty bearish pattern. Again, that's assuming Tesla cannot break above 940. If Tesla can ever break 940 and especially hold above 940, that is when this pattern gets invalidated, and that's where the bulls once again can take control. Will that happen? Honestly, I think it might. I don't think it's impossible, mainly because of the hype going into the earning or the split for next week. So that's definitely something to consider. And we know how Tesla can be. It's quite a parabolic stock sometimes, right? So, it's hard to bet against it. Let's just say that, which is why I never, or not anymore at least, buy puts on Tesla. If anything, I buy puts on SPY. I don't know. I don't like buying puts on Tesla, mainly because I love the company, and it's just it's a very interesting stock to buy puts on. Let's just say that you need steal emotions, if you will. It's a very difficult stock to short. Let's just say that. So I did something by accident. Oops. Anyways, so that's kind of that, right? So that's kind of what the bears want to see. And for the ultimate like rejection, what the bears want to see on top of the double top is ideally like the most, you know, the thing that really bears want to see is a fall below like this 840. If the 840 ever breaks, that's extremely bearish. That's like pretty much confirmed that this is most likely a double top to the downside bearish confirmation, right? If this holds, rather, if we don't break 840 and we break especially, 940 and we break 840 to the south side, that's extremely bearish. Even if we break like 860, that's already looking pretty bad, right? So just keep that in mind. That's something to consider, in my opinion, mainly because we just ran straight up, which is usually also kind of risky. Usually when you run straight up like this, as without any like, you know, retests, like I said, how I personally thought it would happen would be something like this, come back, retest, and then go like this. That is overall a healthier way to run up. When you go up straight like this, it becomes a little bit more, I guess, scary, more like with more potential for volatility to the downside, from what I've seen in the past at least. So, you know, take it as you will, of course. But the bears want to see essentially a double top rejection right here into a collapse, pretty much breaking 860 and especially 840. That's what the bears want to see. So I personally think both scenarios are currently in play. It's hard to say, but again, if we break 840, the bulls are in control. If 840 does not break, and especially if we start falling back down, in my opinion, the bears can start taking control, and then it really just becomes a battle of 840. If 840 breaks, bulls win. If 860 to 840 breaks, if 940 breaks, bulls win, and if 840 to 860 starts breaking, the bears start winning, right? So that's the way I'm personally viewing it at the very moment. Now, another thing that makes me kind of, you know, more just net bearish, like I've always said, you know, short term, you know, it's fine to be, you know, there's bullish patterns, there's bullish setups, it's fine, you know, whatever, you know, Tesla can run, and I've been saying that for a while, but I said how I'm overall net bearish, right, for the next few months. People were like saying in the comments, like, oh, you know, you're expecting this, where is it? Again, this is months down the road. This isn't next week. This isn't the next day. This isn't the next even month necessarily. This is like pretty much somewhere in fall. Could be September, could be October, could be November, could even be December. But this is the chart that also is extremely important to pay attention to, right? This is the S&P 500 midterm election year seasonal pattern since 1946, quite a long time. We are currently, out of all these different lines, the red line, second year new Democratic president, of course, Biden being a new Democratic president, this being, of course, the second year. So we are following the red line, and we're following it surprisingly quite accurately. So you can see currently we are, of course, in August, and, you know, August tends to be fairly bullish for the most part until maybe the last week-ish. And that's when you kind of start selling off. September starts selling off. You kind of get a small little rally, like a bear rally, and then you start selling off even further up until pretty much end of October, early November. We are currently the red line, and we actually have been, if you look at it compared to, you know, the charts and everything right now, if you were to like layer it on top of this, it's surprisingly close. Let's just say that it's quite close. So that's something that, you know, you want to really keep in mind, guys, that we are currently the red line, which shows us that the majority of August is a bullish month, at the very least a consolidation month, but overall a net bullish month. And that is currently what we are seeing up until the end of August to early September, when the bearish patterns begin taking place. That is currently what I see happening as well. So that's part of the reason why I'm net bearish. On top of that, you also have the TLT versus the QQQ, right? This is the Treasury bond versus the QQQ. Usually when they split, you can see, for instance, right here, where they split up here, right? The QQQ being the black line, the NASDAQ essentially, and then the 20-year Treasury bonds, when they split, usually the QQQ comes back to it. Again, they split up here, QQQ came right back to it. Split up here, big gap between the two, QQQ plummeted right back to it, and look what's happening once again. The QQQ is once again widening, similar to what we had over here. Like if you were to block off this whole right side and just look at this part right here, we have essentially the same situation, right? Like a massive jaw, exactly the same situation. And look what happened not too long after that. It just plummeted to match right back to where it was. It always plays catch up to each other. So that's just something to consider as well. That to me is also kind of bearish, right? This is why I am overall net bearish on the market, even though short term, as we're clearly seeing, and as I've clearly said, we can have these rallies, we can have these short coverings, this euphoria. But again, not financial advice, make your own decisions, take it as you will. I'm doing I'm doing what I personally think is the right move. Obviously, if I make less profit for the month, I don't mind. I don't want to be stuck back holding something, because I'm still overall net bearish, and I still overall think that the market, not just Tesla, I'm not bearish on Tesla, I'm bearish on the market, can make potential new lows. So that is what I'm seeing at the moment, guys. Hopefully this video has been informative. Hopefully you guys maybe learned a thing or two from this. If not, then it is what it is. But I wish you all the best of luck, and I'll see you guys for tomorrow. Peace.